folks. A day and a half left of trading in this holiday shortened week. 1 week ago, Nvidia was trading $195. The S&Ps were on the brink of breaking into 6,800. Kaplooey. Things come unraveled. We come all the way back up to that level without Nvidia. Where are they picking up the slack in this market? You all know. We'll talk about that on pre-market prep. We'll also talk to a money manager from Wedbush Securities, a veteran of the markets, Paul Dietrich. Few earnings reports. I think the analysts are heading out to the Hamptons for Thanksgiving. We got a big show for you today on this Wednesday. Let's get it started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, we did sneak into that 6,800 handle, up 14.5 handles, 67.96. The buck loses par, but still up 15 cents, 99.74. TLT flat 90.29. USO flat at 69.20. GLD and SLV both perking up. GLD up 0.6%, 382.31. SLV over 47, 47.22. And Bitcoin. Where is Bitcoin? Is Bitcoin a value stock? Well, we'll talk about that in a few minutes. These charts here up on the screen are brought to you by our new sponsor, TradeStation. TradeStation is going to help me and you be better traders. Let's bring Triple D onto the stage on this Wednesday. And we got to perk them up. The chat is going to be nice again today.
Are they?
Because you're not feeling well. Gary
I'm feeling a little bit better than yesterday, though. I'm actually off Advil now, so I'm trying to function here. I honestly think I got a second virus. I'm starting to add it up here. So I was like really sick 2 weeks ago, ended up with a sinus infection, felt better all weekend. I was like, oh, I'm better. And then Monday I just got slammed again. And then everybody else around here is getting sick. This flying through schools, Natalie's hockey team. I think I actually picked up a second virus. So, like, I thought it was recurring and it just wasn't going away, the flu bug, but I actually think I picked up a second one. So I'm feeling a little bit better today here. So I'm coming now. So on some antibiotics, I'm coming. I'm going to be back 100% by next week. So
100%.
We'll fight through it today.
So this is breaking news here. Robinhood, PreMarket, and Kalshi are going to be making markets on how many times you get sick in 2026. And right now,
I don't get sick that often. I just get really sick when I do it. So I think it's like twice a year. And if you look up the average person, the average adult gets sick once or twice a year. I feel like I am twice a year, but when I get sick, I'm sick for a month. I'm like, I just don't fight it off. So the kid will get sick and he bounces back in a day. I get sick and it takes me a month to get over it. So bringing the Brentster into this conversation here. He's drinking his morning coffee. Maybe that's what I need to do is start drinking coffee. Should I start doing that? Maybe that would like kill everything. A little bit of caffeine hit those viruses with caffeine.
I don't know. I like that you don't drink coffee, Dennis. I just want to say.
Well, I'm usually naturally excited. Imagine me if I was drinking caffeine in the morning. I'd be
I don't know if I want that.
Yeah. I'd be like the Micro Machine guy.
Shut up already, guy.
Yeah, I wouldn't shut up. Well, we had fun last night in the chat. It was a slow night, but you can see themes developing here. Yesterday especially. I mean, this week is typically one of the strongest weeks for retail stocks. Why is that? Because Black Friday. So we saw it yesterday with obviously a couple companies reporting earnings, and they bought these stocks and they could not stop buying them. And then, Brentster, we were putting together lists of other potential retailers last night, which we can talk about here in a few seconds too. But let's just go to the tail of the tape from yesterday because retailers are hot, especially the low PE ones. Abercrombie and Fitch, for instance, A&F, bring this one up. The move yesterday was astounding, but should it have been like astounding? Because they come out, the earnings were great, and if you look, they're supposed to make $10.50. The thing opens at 77. I mean, it's trading 7 times earnings. Well, okay, ran to 90, so it's trading 9 times earnings. It's still dirt cheap.
Yeah.
So are some of these retailers, because we've been so focused, this market has been rant time. We've been so focused on the AI trade. Like this is it, AI, everything else is like second fiddle. We don't need other stocks. The market's been so focused on AI that's just left everything else for dead. Well, now we've turned. Now that Nvidia and AMD are starting to show some weakness in the AI trade, has lost its luster, and the momentum trades like Palantir have come off, value is cool again. Like value stocks are starting to pick it up here. So I think, what we just do is you run your scanners, you look for PEs under 10, and you look for life. Stocks that are starting to show a little bit of a turn and a little bit of life. That's what's cool here again, folks. PE is back in vogue. Joel's on mute. I'm warning you ahead of time.
Hip to be value. That's the name of the show.
I think so. I think we're in, a market that has been ignoring PE for a very long time. Doesn't matter. Growth, we don't care about PE. We don't care if we pay 150 or 200 times sales for some of these companies here because they're going higher. Now that that bubble has burst, people are going back to the well. They're putting their CFA hats on here and saying, crap, maybe we got to actually do some homework here. And it's not just out of just buying maybe we got to actually do some homework here. And it's not just out of just buying maybe we got to
you hear yourself
actually do some
sorry.
homework here.
Hold
Yeah.
on.
Mute that up.
Okay.
What
here,
you do? What you do, Brad? That's a new trick.
He's just got the show playing in the background.
I will
it's
figure
the
it out.
STN room.
I got it. Okay.
Bring it back up because
Hold
we
on.
ran some scans in the STN room last night. We're looking for beaten down. One, I think this is a good week to be long retailers. So we're starting to look for those names as well. But two is we're looking for low PE stuff. Like that's where we're looking.
Is it
so
hard
because the bubbles burst, like the Oclo, we've talked about that one relentlessly. I mean, just go through the higher PE stuff has all been killed. Circle, CoreWeave, Palantir. I mean, Palantir has held up a little bit better. It's the darling of the Momo names. But, if we zoom in and my eyes are going to be hard to see that, but maybe just read us, show it, and some people can see it, but read off a couple names on this list. And what is this list?
Okay, so this list is put together by one of our favorite STN members last night, just sorted by PE. This is a bunch of retail stocks sorted by PE. So I know it's small and it's hard to zoom. I can zoom in a little bit, but then it cuts off the top. Well, let's just start in the B's. Build-A-Bear,
Sure.
BBW, Bath and Body Works, BBWY, Best Buy even fits in there. Bloomin'
So these stocks are low PE?
These are all low P under 10. Yeah.
PE's
Dennis
under
is
10.
getting pencil out.
Under, actually, it's probably under like 12 or 13, but I
Okay.
mean, it's the same. Cheesecake Factory, CAKE, cake. That's a good
Portion's
one.
too big.
We have Jack in the Box, JACK. That was one that was going yesterday. Kohl's, of course, yesterday. Lululemon has been very strong. Macy's.
Yeah, and its P's down to 14 from 40. Like it's starting to show life too. We
Dave
can
and
clearly
Buster's.
see your job as a trader, not as an investor. We're talking trades right now. Your job as a trader is to identify patterns and obviously, turns in, momentum, life. I mean, we're seeing a lot of life in some of these names showing up now. Yesterday was clearly the value rally, especially with retailers because it's retail week. So the question is, do all these other stocks start going? I think you're starting to look at some of these other stocks on dips. I think PE is cool again. I think it could last a while. So fun, like just going back and again, we do comparisons because, history doesn't repeat itself, but it often rhymes. Mark Twain, Ryan Dietrich saying that on our show all the time as well. But if we go back to the tech bubble burst of March 2000, you had value stocks come back into favor for a decade. A decade. I'm not saying this is going to be a decade of value, but we basically had all these, nosebleed momentum names crash, like the Circles, the CoreWeaves, not SPY, not at all SPY. Diversified, Mega Cap 7 held up very well. Meg 7's held up very well. It's the stocks that were trading like 100 times earnings. A lot of those have come, or even more than that. Some of these stocks don't even have earnings. A lot of those have come down substantially. Some of these are down 50, 60, 70% from their highs 2 months ago. So they've crashed. That's a crash. So now the dust settles and you say, do I come in and buy these stocks that still don't make any money, still trade 100 times earnings, or do you start thinking about other things? I think it's the market where we're starting to think about a little bit about other things. So looking through, combing through, running scans, because, hey, this might just be a last month trade, and value has definitely picked it up. You can see the drug stocks, you can see Berkshire Hathaway, you can see, some of the financials have actually performed, not so much because there's a lot of momentum in those, but some of these lower PE names have definitely been outperforming in the last few weeks. Does it continue? I think it continues in the short run. Thoughts? Give me your best value stocks, folks. People are saying Fubo. I don't really know about Fubo, but somebody's saying it's trading 8 times earnings. Give me your best value stocks, because I think we got to start looking in other areas now. I don't think it's going to be as easy in the AMDs and the Nvidias, going forward here, because some of these stocks are just fully valued.
And I think we saw a little bit of spillover yesterday where we were like, okay, this isn't retail, but this is definitely a beaten down stock. So maybe it's just starting in retail and we'll kind of spill over into like a name like a Fubo. I think Fubo is kind of a good one.
And again, great EKS saying you got to watch your PEs because it can be low if it's a cyclical business. So I think we're trying to look at, not cyclical businesses, and everything's cyclical to a certain extent. But not like, like getting fooled by like a Micron and saying, oh man, because DRAM prices are up. So Micron's one of the most cyclical businesses you can get.
Mm-hmm.
So I think we just start looking outside the box. We haven't had to look outside the box all year. The AI box has just been making everybody's returns.
Yep.
But now I think we're at a point where it doesn't get as easy for the AI trade going forward. It's easy for Google maybe right now, which we can talk about that in a few seconds, because Google's been unbelievable. But I just want to focus on this conversation. I want to hear your best value name. Like cool PEs. I mean, General Motors has been an unbelievable run here.
Yep.
I said it back when it was 50. If I was a company, I would have taken it private 6 times.
If we bought 1,000 shares every time you said they should have gone private, we'd be making money. We'd be making a lot of money.
We'd be making a lot of money.
Okay.
I mean, Ford's perking up. I'm not saying these are the best long-term investments, but right now, PE is clearly low. PE is cool again. How long that lasts, nobody has a crystal ball. But why fight it? So we might as well keep looking, because you know what? There's a lot of low PE stocks that haven't even run up yet. Abercrombie & Fitch just ran up yesterday because it had good earnings. Urban Outfitters, another one here.
Oh, did Urban explode?
What's that, Joel?
Did Urban took off too?
Urban took off. You're seeing these retailers are like, oh my gosh, these companies make a lot of money. Yeah, they do. Urban Outfitters reported $1.28 versus $1.18, 152 versus 147. I don't have the full year guidance here, but if you just obviously the next quarter is always better. So if you just went like $1.28 times 4, simplicity, and it's going to be higher than that because the fourth quarter is always a hell of a lot higher because of Christmas. But I mean, $32.60, you're talking about stocks trading 11 or 12 times earnings. Again, this is the theme in retail. This is the theme in drugs. I mean, Pfizer is trading like 9 times earnings. Bristol Myers is like 7 times earnings. Look at Merck. Merck was like 11 times earnings. It's exploded higher in the last 2 weeks from 85 to 105. Why? Because low PE is cool again. Because people have been killed in the high PE stuff, and they're like, we got to do something different. So we've been talking about the value trade for the last month. I don't think it's going to be over. Like a lot of times, you see value, pick it up for a few weeks, and then it dies off again. I don't know if that's the case this time. I think value actually has a case to stay strong for the foreseeable future.
Did Urban report pizza sales?
Let me look.
He always has these jokes.
This jokester.
And then you guys tell me that it's not true, that it never happened. And then I go to Google or ChatGPT. I am going to be, that's my New Year's resolution. I am going to be a ChatGPT, Gemini, whatever the AI.
We don't need ChatGPT, just Gemini.
Just Gemini?
According to Benioff.
Yeah, just Gemini. That's what I'm going to do. Okay. If you take away any technical take from today's show in Urban Outfitters, I want you to jot this down.
Okay.
If the all-time high is 80.71, don't pay 83. That's all I have to say.
Don't buy it over the all-time high.
You can if you want, but if it cuts back down through it, then you get the hell out. So selling in here at the $78 level, I'll call that like a quarter star support here, holding 78 off the open, a little layer underneath it. But if you want a real target, like a real trader in real markets, they would look at the all-time high that was made just a few months ago at 80.71. That's my level. 80.73.
So other stocks reporting, we have a lot of earnings, which we can go through right now. Should we just recap Google quickly, though? Because Google is up there again. We bought it last night. I'm like, I actually lightened up some of my AMD and my long-term portfolio into yesterday's rally. Yeah, you can say, what rally, Dennis? What are you talking about? Yeah, it rallied $11 in the afternoon. It rallied $11 off the low. So I did lighten up a little bit of AMD. I'm interested in buying Google. I've been trading Google. I bought Google in the trading account. I've sold it already, but just for overnight trades. But I think for the foreseeable future, Google's in favor, and Nvidia and AMD are out of favor. And I think we continue to, and there's be a headline that changes that again. But right now, that's tradable, actionable information that Google is in favor and AMD and Nvidia are out of favor. So more Google. Do we have more Google news this morning? It's just recapping from yesterday. Obviously, the whole Gemini thing, Benioff kickstarting it. Was there more news?
I don't see that there was more news overnight, but I think yesterday was a polarizing day for the Google Bears and the Bulls. There was quite a commotion, and I will ask the chat now for their thoughts on the Google stuff yesterday. We had some people in the comment section saying, wow, Google is like going to kill this GPU thing. And then we had people saying TPUs have been out for ages and no one cared. A comment from James J responding to yesterday's pre-market prep episode. All of software has to be rewritten to use TPUs. It's not going to happen. We had a comment that GPUs are not, I think this one was from Daily Tuna, GPUs are not that efficient in machine learning and energy constraint out there with data centers. It means alternatives like the TPUs will be used. So kind of prompting the chat here again. After a day of considering this, are we feeling like this is Google dominance, or are we feeling like this is, kind of already been out there and maybe just caught some attention yesterday?
I mean, it could just be the DeepSeek moment. That all these stocks, Nvidia, AMD, is all just going to be buys here because this is way overdone. But it could also be, we titled it, potentially competition. The competition, not good. So I think I'm a little bit in the latter. I think it's going to be some competition here. I think if Meta's thinking about, just, working with Google and all of a sudden maybe not working with AMD or Nvidia, that's interesting in itself. So we'll find out more. This story is in the early innings, and maybe the pie gets big enough for all players. But I just think like it's been such a market where it's been Nvidia dominated, all about obviously AI. Now, I mean, that trade's coming off. There's so many companies linked. Like even look to Dell. Dell reported last night, and we were saying Dell's probably a sell on the rip. It was. It actually bounced back here now. But I mean, there's just so much money that has been linked to everything Nvidia. So anything that, tries to, give us competition there is not going to be good. I mean, maybe we should just do the technicals on Nvidia here, Joel, because it's starting to show a little bit of weakness here overall in the chart. I mean, we're still hanging above, well above the 200-day, but we've broken through the 50. I mean, technically speaking, the stock looks tired.
Yeah, it did. The sellers came in and they came in fast. So now the retracement is no longer valid. We were keying on that 179.63 area, very heavily focused on that in the STN room. And once that was breached, it was hands off. Now you dipped down to 169.55, had a nice recovery. I'm trying to see, do I have any daily lows in there? No, not really. Not really. So what you want to look at now is look at that 50-day. I mean, that's at 186.62. I mean, that's going to start coming down, and it's going to start coming down more. So, I mean, the longer it retakes the 50-day, the higher the probability of go down and testing the 200-day at 153.20. And I'm sure a lot of people don't want to hear that. Who knows if it's going to get that low? But just think, they just came out with a good earnings report, right? Or not good, but not great. Okay. Also, you've had, and I know there's always people selling their stocks or whatever, but you've had a lot of people liquidate, right? Their Nvidia position. Mike Berry, whatever call he makes, whatever. A lot of people. But what you have to understand when you're buying this stock on a dip, okay, there's a whole different crowd in here now than when it was ripping last month. There's a crowd that is caught in this red bar. And you know what they're looking to do? Oh, if this gets back to 180, oh, I just want to see
Yeah.
Overhead
180.
supply all of a sudden.
I just want to see 180 and a half, right? So the complexion of the market changed. Also, you know, like when you used to have the comments, they would mention company, JKL, that stock would take off, right? You're not seeing that as much anymore. And I think if you want to like reprogram your algorithms, now Google, Apple is going to be using more Google stuff. Now Google is going to, ponying up to Meta. So the dynamic, it has changed. The price action from yesterday confirmed it. What we need to decide as traders, investors, because I don't even compare this to DeepSeek. Like for DeepSeek, I could say, that was BS, and that wasn't. But this is different. This is a US
Google.
company. It's Google. It's Google. And I
It's
physically use Google for search and everything. And I could tell the improvements in Google just on the regular search over the last few months.
Oh, yeah.
And now it's getting better.
I think so too. I mean, I find myself just using the Google when you search and it pops up the AI answer, and I'm like, oh, cool. It's there. I mean, Benioff said he's got Gemini and he's not going back. I mean, not that Benioff is this be-all, end-all, but this guy knows a hell of a lot about technology. A hell of a, obviously we're talking Salesforce CEO. I think you're right, Joel. This is not DeepSeek. So I think we've got to be somewhat cautious with, trading Nvidia's 35, 40 times. I mean, you can look at it on a forward basis and say, well, it's only 26 times. But if there's all of a sudden, competition coming, maybe those sales aren't going to hit those targets. I mean, the margins are awesome. Nvidia is still the best of breed here. I haven't sold any of my long-term Nvidia, but I mean, you can't argue with performance. It's been unbelievable. I mean, somebody in chat says their average cost base is 35. I was buying at 50 last year. There's a lot of people sitting on a lot of gains here. Stock's had an incredible run. I mean, in 23, we were $13. We're 178. We're 1,500% in 2 years. Don't think this can't go down. So don't think that this is not an outside possibility that this is fully valued. If Google is real competition for Nvidia, if this turns out not to be a DeepSeek moment, you're going to want to have ring in the register a little bit here. So I haven't, but I think we stay tuned.
Okay. All right. We are now moving on with our regular
Our guest is in the background.
You want to bring Paul on early?
I hate making our guests wait. So they come early. I think we go early. Brentster, can you run that intro?
This guy's a good one.
Let's go.
There he is with a big old smile. Paul Dietrich, Wedbush Securities Chief Investment Analyst. Paul, how you doing today?
Good.
It's great. It's great to have you back on. I think we had you on just a few months ago.
Right.
And boy, not much has been going on in the market lately, Paul. I mean, it's just, slow holiday, Thanksgiving trading. But what we like to focus on this show is identifying, turns in changes, in trends, and an investor, who knows how long these things are going to last. But what about the growth and the value? The world's greatest argument here, Paul. And I kind of know which way you're leaning, but give us your perspective on growth versus value.
Well, I look at long-term trends, and I've been a student for 30 years of looking at historical long-term trends and business pivot points in the business cycle. And it's a little bit hard right now because you have AI, which I actually believe is going to be changing the world. It really is one of those unbelievable technologies, and it's just going up and up and up. And almost all of CAPEX and capital expenditure investments in the United States, like 95% of them, are going into this one industry. We need it. You know, as I said, it's going to change the world. It's like back in the days when we had railroads and electricity coming in as the new technologies. Someone had to build the rails, the infrastructure, so that the trains could run all over the United States. Someone had to put in the electrical grids and wire up every home so we could distribute electricity. Almost everybody, if you look at the history of these things, of the infrastructure of new technologies, they lost their shirts. They lost all their money. These companies went bankrupt over and over again, but we got railroads and we got electricity thanks to all those investors who lost all the money. People forget even in the internet infrastructure, you know, they can't remember WorldCom and they can't remember Global Crossing and L3 and all these infrastructure is generic as opposed to AI. The AI companies, Google, they can have patents, they can have all sorts of stuff, but the data centers, they all have to work with everybody and they're generic. And so there's going to be a lot of these things are going bankrupt. And so I see this still continuing for quite some time before, it might be 3 or 4 years before we start seeing some problems with the infrastructure of AI as opposed to AI itself. But I'm looking at the long-term trends of everything else in the economy other than AI. And we're seeing a classic business cycle turn. And it's going, you look at retail sales. I think we're getting the beige book today. That's going to be really interesting. Manufacturing, everything on Main Street is kind of contracting. And so how is that going to play out when we have this one massive technology that's kind of driving GDP and everything else? I think we'd probably have flat or negative GDP right now if it weren't for capital expenditures and what's going on in this unbelievable new technology. So the U.S. is in a funny place. I have one one investment to play because I really think this is important for clients, is how do you play the AI and how do you play the AI infrastructure indirectly? And I believe it's through utilities. I was a state legislator for 4 years, a long time ago. And I served on the utilities commissions at that time. And the wonderful thing about utilities, and they came about because of all the failures of companies trying to electrify the United States after electricity was created. After all these companies went under, the states decided they had to step in and figure out something to stabilize and put electricity into everybody's home. And what you do is the state electrical utilities, which supply the power for all of these data centers, and we know that the power needs are enormous. I understand. I live in outside of Washington, D.C. in Northern Virginia, which is kind of the Vatican of data centers because of the government and the Pentagon. I mean, every corner we've got a data center going up in Northern Virginia. And what some of these data centers are sitting kind of empty at the moment because they can't get power. And what the power companies do is that they buy power from any source: oil, natural gas, coal, nuclear, solar, it doesn't matter. And then the state gives them like a 9 to 15% guaranteed profit, 9 to 15% guaranteed profit as a utility. And so look at what the utility ETFs have done this year, you know, that they're doing better than most AI companies. They're up there with gold. in terms of performance. And I think this is going to continue. It used to be looked at utilities as a quasi bond, as a dividend play. It was a widows and orphan type of investment, and it didn't really do much. But that's changing because of AI, and I think it's a safe, indirect play with almost, with a kind of guaranteed return no matter what happens in the future. And so that's my contribution.
That's your opening comments.
Sorry.
No, that was me. I just threw that in there, Dennis. Go ahead.
Yeah, no, actually, I talked over you. Paul, so we've seen the nuclear trade really take off because of obviously AI. Is there a place for some of the laggard utility stocks here? Because, this has been like Southern, for instance, like we just talked classic utility companies here. I mean, it's kind of been thrown out. I mean, the last, month here, Southern's come down from $100 to $89. Duke Energy, another classic utility stock, has not really performed. I mean, it's been, the nuclear stocks have given so much love because of obviously this need for power, but your classic utility stocks really have not. Is there a place where, maybe some of these other stocks, catch up?
Well, you have to make a distinction in utility between those that are state regulated and those that really, some of them have expanded in other states and they're not really, so they don't really have the guarantee. I think that the safe thing is not to be picking and choosing between energy sources like oil or natural gas. I mean, so many things, Saudi Arabia can make changes. Russia can make changes in oil prices and things like that. I don't want to get into all that stuff. I want to be, I like the idea of being into a utilities. There's a Vanguard utilities ETF that's in all of these things, and It's done extremely well. Don't pick and choose because some utilities are tied to certain power sources like nuclear or coal and things like that. Get in there. This is not an individual utilities play. This is going to be a play for AI energy, and the good utilities can take power from any source they want. So long as the regulators say it's got to be least expensive, but that's okay. And then over and above it, you get your guaranteed performance. And so I think it's a mistake to try to pick and choose utilities. That's a fool's game when you can buy an ETF and just play the whole industry.
Paul, I want to go back to something you said earlier, and you were talking about a turn in the business cycle, a classic turn in the business cycle here. Were you talking like a turn, you're seeing signs like a turn for the better? Because obviously there's been a lot of businesses, like we've been driven by AI for the last year, really. Technology has just picked up and just run with this market. And if you look, the biggest performers and the best performers, but there's been a lot of other stocks that have just, underperformed massively. Where, you've had some traditional companies, even looking to a General Motors and Ford, where some of these companies have come down to like P's like 6, 7. They've picked it up in the last month here. Is there a place where, value stocks start to come back into favor here because the overall economy starts to turn, the real economy, not the AI economy?
Yeah, that will happen. I don't think we're there yet. We are still at a peak. If you look at the 10, biggest stocks, the Magnificent 10, I guess they're now calling it. Those have done really, really well. But you look at the other 490 stocks, the S&P 500, and it's nothing to jump up and down about. And what I'm looking at is not the stock market, and I think that's a mistake. I'm looking at the underlying economy. You start seeing retail sales pulling back. You start looking at the non-manufacturing Philly index, I guess, came out last night or this morning. Now 3 or 4 months in contraction. You start looking at jobs, And you can't look at just the unemployment rate, because we have an interesting thing that's never happened in the United States before, is that we have a contracting, if you look at the raw data, we're having a contracting jobs market, but unemployment is not going up as fast as you would think it should. But part of that reason is that we have a contracting labor base. We have more and more people retiring. We have a lot of immigrants have actually, according to the government figures, self-deported and left the country. We have no new immigrants coming in to take up those jobs. And so it's an interesting thing. We have more layoffs, and we're seeing wages not keeping up with employment, and then you're seeing this kind of contracting labor force. We've been seeing women leaving the labor force. I suspect that has something to do with childcare costs. But whatever it is, we've got a contracting group of people who want jobs, and we've got a lot of layoffs. So it's an interesting dynamic, and just looking at the unemployment rate is going to screw you up a bit. But spending, retail sales, the effect of tariffs, the whole affordability issue, which I believe is really real for those people who don't work on Wall Street, the average Main Street person, they're laughing at politicians who are telling them that prices are going down and not up. And we're seeing it in the retail sales. So all of this is coming about. What you have to do is you have to look at the leading economic indicators. I mean, you look at shipping right now, and it's just, there's nothing coming in, or I'm being facetious, but huge drops in shipping of goods coming in. That means that Walmart isn't, buying as much, and they don't think that they're going to sell as much, over the Christmas season. There are just a whole bunch of these sort of indicators. At some point, and I saw this in 2008 and 2009, if you remember, the market hit its bottom on March 9th, 2009. But by that time, when everyone was capitulating, when everyone was saying, I'm never going to go into the stock market again, that was when I started to see all these leading economic indicators starting to go up again. Manufacturing new orders, which is a leading economic indicator. All of these things, they were starting to go up. And so, although we hit the bottom of the market on March 9th, I was kind of getting back into the market a couple months later, as I saw a sustained couple of months of leading economic indicator growth. That's when to get back into the market. But you're not going to see that through the stock market. You only see that through looking at the economy itself.
Okay, Paul, we got to wrap this interview up, though. But boy, we got some burning questions here. First, let's talk about those books up there. Okay? Give me your favorite fiction and nonfiction book, and you can throw a market book in there too.
I read a lot of Tolstoy and Dostoevsky and the classics. I have 12,000 plus books in my library here. But I'll tell you, one of the best books I've read in a long time just came out a few weeks ago. It's Andrew Ross Sorkin's 1929. It's a massive book. It's a massive history. He really has a feel for trends. And boy, you can see some trends now in the non-AI economy that we were seeing back in 1929.
That's what I wrote my high school term paper on, was the 1929 crash. Okay, and wow, you covered everything there. All right. We got to get to it here. Your pictures. You got 4 pictures there. All right. Let's start with the top picture.
Which one is that?
The top right. That would mean top right. Is that the Pope?
Yes. I did some work for him. I was an attorney for a long time before I was an investment analyst and investment manager. And for 6 months, I worked in the Vatican for John Paul II. I got to have lunch with him every Wednesday.
Wow.
He was a great guy, and I really liked him. When I was practicing law, I also did some work for Mother Teresa.
Yeah, where's the Mother Teresa pic?
Let's see, where is she? Oh, she's right here. I guess.
Okay.
This is crazy.
Okay.
And then I was one of the finance chairmen of Reagan's 1980. I worked for him in 1976. I ran a few states for him. We lost that to Gerald Ford. And then in 1980, we came back and won it. And I was one of the finance chairmen at that time in 1980. And then I'm writing a book based on my conversations with the Dalai Lama, and he's right there.
Oh, yeah.
And that should come out sometime mid next year.
Do you have any of their emails? Because we're looking for some new guests on the show. I know some of them are not around anymore, but
be hard to get.
wow.
Yeah.
So, man,
incredible.
oh man, if I had a hat on, I'd be like tipping my hat to you, Paul Dietrich, chef. I mean, he's getting signals. Dennis, can you program signals from the Dalai Lama, Mother Teresa,
No, this guy's
and the
he's
Pope?
connected right there, man. This guy's got connections.
Holy mackerel, man! I don't know. We want to ask you about your current political thoughts. So that's the end of a fantastic segment with Paul Dietrich. You are running right back to the top of our list of guests to get back in 2026. Thank you so much.
Thank you.
That was
Thanks,
fantastic.
Paul. That was great.
Wow, Dennis, a new precedent has been set on pre-market.
That's crazy. You think you've done stuff with your life, and then you look at that, and you're like, whoa, I've done nothing. You sit down with the Pope every Wednesday.
You know what? I wonder what the Pope had for lunch.
We should have asked. What did he eat for lunch every Wednesday?
And look at Brett. Brett, come on now, Brett. Come on, quit laughing. Dalai Lama.
Pick it up.
Tolstoy. Who else? Who else was there?
Dostoevsky, yeah. Oh, Paul says the Pope ate pasta.
Pasta. We know. Look at the inside scoop here.
I'm sorry. I'm crying.
We give you information. We give you trading ideas, and we even tell you what the Pope ate for lunch. Man, we give you everything here on Pre-Market Prep. Thanks, Paul. That was a fantastic interview, actually.
That
was fun. A lot of fun.
Oh, man, I might take the rest of the day off here. I mean,
that's crazy.
Geez.
So, okay, back to the markets.
Compose ourselves.
We did get an 8:30 number, Brentster.
We got a few.
Market didn't respond much to it, but you might as well give us the number.
We got our weekly jobless claims data. I can't tell if this is delayed. I think this is our last week's weekly jobless claims data. It was a little lighter than expected. 216,000 jobless claims. Economists were looking for around a 226,000 jobless claims. We also got our durable goods orders. You guys know I like to look at the core figures, core durable goods. This was for the month of September, month over month, up 0.6%, kind of in line. Market didn't really flinch too much at those data points, which I'm not surprised by.
I mean, were there numbers from when?
The jobless claims, as far as I can tell, are recent. The durable goods orders were delayed. They were from September. So, yep.
Okay, let's go to the earnings parade here. There was a lot of earnings last night, and there's one earnings report for this morning of note. And then we're pretty much like holiday trade. There's no earnings tonight. There's none tomorrow. Obviously,
none
the holiday Friday. So we're in full Black Friday mode after we cover these earnings reports here. I want to go to Dell from last night because Dell, a lot of people were watching this one. We were fading the rip. I know there's a few people had a good trade on it. It did dip back down, but it's rallied back up here again. Give us those numbers for Dell because they're pretty darn good.
Pretty darn good. Yeah, they beat on the bottom line, 259 versus 247. It looks like they did miss slightly on their sales figure, just over 27 billion. The guidance though was solid. They gave next quarter guidance earnings 350, analysts down around 320. They also raised their 2026 earnings guidance by about 40 cents, had been around 955, now up to 992. Analysts are still down around 955 for Dell. That was the report.
Stock
Yeah.
popped, dropped, and then repopped. So the numbers were fine. The problem was last night, that whole like data center trade is just a little bit cold. So it was predictable that they might sell off. They've rallied back. I mean, something's happening with a lot of these AI stocks here this morning too, because Oracle's getting a nice lift here, up 10 points now. We've had AMD, which was down all morning, just went up 3 points. Nvidia. So somebody obviously has said something here during our interview.
There is. I thought we heard this, but Chinese regulators have reportedly barred BitDance, the owner of TikTok, from using Nvidia chips in new data centers. That was already out, right?
It seems like good news though. They were seeing
Yeah,
popbacks in these stocks, or bad news.
Yeah, that seems like bad news.
We're seeing popbacks in these stocks. So I'm trying to just look quickly here. Obviously, we're doing a live show, so if you've got the information here, let us know. We've missed it. But we are seeing huge snapback rallies here in Nvidia, AMD, in Oracle here this morning. I feel like somebody, maybe Benioff said, hell, I did Gemini. I said I wasn't going back, but I found myself on ChatGPT this morning. That's a joke. But, it could just be as simple as that somebody's defending them.
Breeze
this
says,
is a huge snapback from this morning. Like, we were weak on Nvidia all morning. Like, look at the chart here, Joel. Nvidia has been weak all morning. It just, right now, I'm going to bring the charts back up here.
I got it. Yep.
Look at this. Look at what we just did in the last, 20 minutes, half hour. We went from 176. We just hit 183. Somebody said something.
Somebody said something somewhere.
And Google falling off.
Yeah, which has been
so we know
the
Google is
trade.
opposite Nvidia right now.
Yeah. Yep.
Somebody big just defended Nvidia and GPUs. Somebody big just defended it. We'll find out, but we got to be digging here. I'd imagine AVGO. Is AVGO going down? Yep. AVGO just turned red. Yeah, crazy turn here for these stocks.
AMD moving higher. I think you said that, Dennis.
AMD, Oracle, all the stocks that typically move. So you got this GPU versus TPU thing happening right now. And that's clear. You have AVGO and Google are linked up. Then you have AMD, Nvidia, Oracle all linked up too. So somebody defended GPUs. Somebody said something.
Real quick, technically on the Dell, I wish we would have been looking at this closer to the earnings the last few days. I mean, it came down to the 200, right? If stock's on a strong uptrend, it loses the 50-day. It comes down to the 200-day. You take a poke at it, and you're getting a nice move. I'm going to look a little bit longer term here. I don't know if I want to chase it up like $7, but maybe if you get a pullback in the yesterday's range or perhaps in the Tuesday's range. More importantly, long term for the, and long term, I'll go to the end of the year. Hey, we're going to get half back of this move, 143. That also right there with the 50-day moving average. If you're bullish, long and strong here, or you bought the dip, that would be a target I would look at in Dell, DEL. And I have never. Oh, well, I do have one Microsoft Surface. I don't know where that is, but I didn't like that because have you ever had a Surface? Have you ever bought one of those things? Dennis, did you ever have one?
No, I've never even tried it.
My shoulders get tired because
you're hunched over it.
It's so little that I got huge shoulders, but
of course.
Yeah, just type in. But there, I like it. Let's see if we could take out the pre-market high for DELL.
The barbell approach, Gabe Fabe, the AI barbell approach, hold both GPU stocks and TPU stocks.
Well, that's it. So we clearly see an inverse correlation, like the algos are completely trading Google against Nvidia right now, and AVGO linked up with Google, AMD, Oracle linked up together. So those relationships will hold for a while here. It is TPUs versus GPUs right now. But guaranteed, somebody big just defended GPUs because you wouldn't see those huge pops. So we'll find out. This morning we had Deere. Stock was trading down ahead of it last night and obviously comes out this morning, misses. Give us the details here, Brentster.
I see a beat, 393 versus 388. That's not very much of a beat, mind you. Sales, I also see a beat around over 12 billion. Let me check for guidance here real quick. They did give some 2026 net income guidance. I don't have a comparable figure for you, but I will tell you that they are expecting 2026 net income down in the range of 5 to 20%. That's quite a large range. So maybe
They're
the street
citing
kind of pointed
margin
to that.
contraction from tariffs too.
Okay,
So tariff problems.
that'll do it. That'll do it.
Yeah. So Deere is getting hit on this. I think Deere. How low did we get, Joel? Are we showing some life here at all?
We're way off the pre-market low. Pre-market low comes in at 466.50, and what do you got? You got the 200-day at 467.29. Not sure what the expected move was, but I think you might have already seen the low of the day in here in Deere. Just kind of really had spent a lot of time between the 50 and the 200. So let's see if it can get back. It's got a ways to go to get back above the 200. Or the 50. That's 44.51, and let's see if we can find support again here under the 470 area.
So a bunch of other stocks reported last night: Zscaler, HPQ, Nutanix, Workday. You let us know if you want to cover any specifically. I'm going to cover Zscaler because this is another stock that has been beat up as of late. You know, it's stock at $332, but the nosebleed valuation stocks are coming off. We know this market has moved to lower PE stocks as opposed to higher PE stocks. It did it over a month ago, and it continues. The forward PE on Zscaler is 78, so it's not a cheap stock. Wow. But give us the earnings here, Brentster.
Earnings were solid. Guidance a little less solid for the quarter. They reported 96 cents, a 10-cent beat. Sales 788 million. They beat the estimate of 773 million. The Q2 guidance was in line. They did raise their fiscal year guidance, and it was pretty solid. 378 to 382 for earnings. Analysts are down under 370 for Zscaler, but shares here this morning trading down about 5 or 6%. High bar.
I think it's trading 80 times forward earnings. I mean, we're just not we're not in Kansas anymore. They're just not liking those stocks that are trading at those nosebleed valuations. It might change. Maybe it changes today. Who knows? But at this point in time, high P's out of favor, low P's in favor. I think that's until further notice. Keep listening to the show because we'll change your mind. I know people hate it when I change my mind, but I'll say it again. As a trader, it is your job to change your mind. It is not, like you cannot stick. As an investor, buy good companies, reasonable valuation, stick with the long term. As a trader, you got to constantly be flipping because if you're not, you're going to get crushed in a month like November. You're going to get crushed. You've got to be flipping around and changing your mind continuously here. So right now, low P is in favor. Stay tuned, though.
I think the pre-market low could be in. Not sure sure what the expected move was. Pre-market low comes in at 260.10, so we have bounced over $10 off that. Maybe a more reasonable level to take a look at today, if you want trying to buy a dip in this, would be the 200-day at 265 even. But working on a big red monthly bar, and last time you did that, I don't know if we're going to get a repeat of this performance in late 21, early 22, but not a good looking red bar monthly bar for Zscaler.
Want to do the Hive? Let's do the Hive. Let's do the Hive real quick.
Go.
Joe pulled up the chart. We got the overlay on the screen for you. Pre-market prep, folks. You know it is brought to you by Hive Digital Technologies, a global leader in grid-powered data centers for Bitcoin mining, high-performance computing, and AI, operating with nearly half a gigawatt of renewable energy. Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. That is only a month away, folks. Believe it or not, there's a QR code in the bottom right corner of your screen. Scan that to go to Hive's website. You can learn more about them. There's also a link in the description of this YouTube video. Thanks again to our wonderful sponsor, Hive Digital Technologies.
I think the Oracle bounce here this morning is off this Deutsche Bank note. It was significant. I'm just going to read from the note. Deutsche Bank believes the recent pullback in shares of Oracle brings an attractive entry point. The firm reiterates its buy rating with a $375 price target.
Mama.
Shares at current levels give Oracle little, if any, credit for its business with
I
OpenAI,
agree.
the analyst tells investors in a research note. So they're saying, forget about, it's not even pricing any of that OpenAI stuff in now. Deutsch says that while the deal brings financial and operational risks, they are offset by the very real opportunity that OpenAI offers. So they're basically defending it and say, hey, this OpenAI stuff works out at all for Oracle. Stock's cheap right now. Probably is correct. I mean, we know the projections when we were doing them out was
Crazy.
we were doing the math, and I forget when we were doing it, but I don't have it in front of me, the numbers, but when we were crunching it out, if they hit those projections out to 2030, the stock is dirt cheap. But OpenAI is a big question mark right now. And obviously the stock has been hit the last few days because Google, the GPU, TPU thing, all these things are factoring in here. But stock has been punished, man. It has been like one of the worst falls in Oracle, probably like quickest falls probably ever in the history of
Ever.
Yeah.
Ever.
Like, could it go from $345 to $185? Like, it got Oracle cut in half. Not often Oracle gets cut in half.
Sure, it looks like there's a catalyst here to trade. First things first for today. Not sure what the expected range in is for the day. It's probably like 6, 7, 8 points. So you're already exceeding that. Trading at the highs of the pre-market session. So you want that to continue. 200-day at 210.80. I would say over the next week or so, I mean, who knows how fast this thing can move, but you had an ugly bar. And on that day, it had a high of 234. Oh, was that Nvidia? Oh, yeah, that was Nvidia crap out day. It had a high of 234, and it dumped to 210.30 and closed at 210.69. I don't think we're going to see 234 today, but I just think you're working into an area where, people got caught on that day. And if you were to buy the dipper at 185 at 63 yesterday, and you're banking 20 points on an overnight trade or went crazy with some 200 options or something, nice pop here in shares of Oracle. I mean, we were figuring the math. Like, if they were going to make that 30 billion, we were saying this should be $1,000 stock. Now, I don't know what that's probably like Joel math, but when
they
we
kept
look,
that 35 time valuation, yeah, and we weren't hoping it was going to get that high, but we're just like at $300 and at $200 now. I mean, if they hit any of those targets that Allison was throwing out there for 2030, the stock is ridiculously cheap. Question is, are they going to hit those targets? And very reliant on OpenAI. But like the Deutsche Bank analyst saying, I mean, we're way below where we were before this OpenAI stuff was even talked about.
Yes. Yeah.
So you're coming back to where the stock was a year and a half ago. So a lot of bad news, or a lot of that OpenAI good news is gone. So I think I agree with the Deutsche Bank analyst.
Fair value to me right now. Just like you take out that news, you throw out the high, you throw out the low. The stock was trading at 240 before that news came out. Was it fairly valued at 345? No. Was it fairly valued under 200? Maybe not. So, the points of origin, I bet you that'd be an interesting area. That's nowhere near the 50% retracement. So let's see what's going on with shares of Oracle. But so far, when you saw something out there, there's the news. Deutsche Bank moving shares of Oracle.
Minute here left, just summing up thoughts. It's going to be a confusing day. I still think retailers in favor because typically this is a very strong week for retail stocks because of Black Friday coming. So we'll still be playing those stocks from the long side. The bounce back in Nvidia and AMD is interesting here because that could reignite the AI trade across the board. So don't just think about Oracle. Think about CoreWeave. I mean, CoreWeave has been linked. Think about Iron. A lot of these stocks have really been beat up. So with Nvidia bouncing here this morning, it's probably those stocks bouncing too. So keep Nvidia on your screen. If you're trading CoreWeave, Nvidia is your leader here right now. Always was, but especially right now here. So I imagine if you look at CoreWeave chart, it's probably done the same thing. So it's not just Nvidia, AMD, and Oracle. There's like a couple dozen other AI stocks that are linked in there as well. CoreWeave, obviously Iron, some of these others being part of that as well.
Dennis, who's the guest tomorrow on the show? You're gonna be going solo.
Yeah, I'm taking my day off. I haven't been feeling great, so I'm looking forward to a day off. Obviously, celebrate the U.S. Thanksgiving. How are the Lions gonna do?
They need to win. They absolutely
do.
need.
They need to win.
They need to win. They need as of today, as of right now, they would not be in the playoffs.
Yeah,
If
they need this win.
Yep. They need that. And then what else to cover? Oh, Louis Sykes. We're going to talk about crypto on Friday.
Nice.
Our crypto segment. He's a little cautious before. We'll see if he's buying the dip here in 5 digits. So, folks, everyone, be safe out there. Enjoy your family. Talk about the good stocks in your portfolio, not the bad ones. And don't eat too much turkey. So that's it for today, folks. Pre-market prep. Things are just getting started on the Stock Trader Network.